Great to be here. And thank you, Deborah and Teresa. Always very welcoming introduction. And of course, Miami is a place to visit, either for real estate investment, vacation. And I'm glad that we are holding this International Real Estate Congress. The word international, I think, is becoming more and more critical. Election result from Brazil. Clearly, they're looking for difference compared to what they have witnessed. But if one goes around many countries across the globe, people have become, I would say, more nationalistic. For better or worse, we have to respect democratic choices. In Britain, Brexit, they're saying we want to be out of Europe. Turkey, still clearly a person who is interested in Turkey first. In China, China is indicating China in the new century. Philippines, clearly similar situation. So you are seeing more and more trend. And here in the United States as well. Again, independent of your political view, this is a shift that is going on. So I think it is very good that we have the International Congress of Real Estate to emphasize how important it is that it is not only about domestic home purchases, but there's a lot of international linkages that is going on. In fact, one can say that in America is probably least reliant on import and export for their economy. Import and export takes up less than 15% of the gross domestic product. While other countries like Switzerland, it will be close to 100%. Most of the things they produce in Switzerland, they export. Most of the things they consume in Switzerland, they import. But U.S. is less dependent upon international trade, but international trade is very, very important, as well as the international transaction related to real estate. Currently, I would say because of some of the uncertainty in the global arena, or anytime there's an uncertainty in the global arena, people are attracted to invest in the U.S., whether that will be just for parking of the money, buying the U.S. treasuries, buying U.S. real estate. I hear from China, with Chinese economy growing at 6%, that's much faster than the U.S. Anytime you have economy growing at that rate, someone will become a millionaire. And with 1 billion in population, there's plenty of millionaires, new millionaires being generated, and they come and buy U.S. real estate. Before, I think we have another speaker later in the afternoon who will speak more specifically related to the Chinese buyers. They have been buying principally out in the West Coast, but now they're looking more and more inland to the U.S. as well as in the East Coast. So Venezuela, one of the wealthiest country in the whole Americas, Canada, America, Venezuela, Argentina, say about 40, 50 years ago. Today, that's not the case. Venezuela is blowing up, and consequently, for people who are able to take their money out, they want to take the money out, not for any investment return purposes, but for safety. So you have a lot of dynamics going on currently. And it's very sad to see where you had once a very prosperous country suddenly blowing up into that degree. So let me give you how I see the real estate market developing. Principally here in Miami, International Congress is about the U.S., so that trying to give confidence level or the statistical background as to whether U.S. real estate investment would be just for safe haven reasons, or would it actually provide a rate of return? So give you that perspective. And then I'm going to dive a little about the recent international buyer trend. I know Teresa yesterday discussed in detail about the Miami market, where the foreigners are coming and purchasing, so I will not do that part, but just give you more broader perspective. And I also understand that yesterday you had an economist here, so anytime there's an economist, there's likely to be a little disagreement on the actual forecast, but those are healthy, so that you can digest the information to see where the risk factor may lie, as well as where is a concurrent viewpoints. So the US economy is actually doing quite well currently. In fact, one can say that it's one of the better performing economies in the whole globe. China and India, they are growing faster, but they're starting from a lower base point, so naturally they will grow faster. But job addition for 8 straight years, unemployment rate is actually below 4%. In a free society where people have freedom to quit their job and look for new ones, and also in a free society where companies have right to fire incompetent workers, we will never have 0% unemployment, so there will always be some level of unemployment rate in a free society. So what is good, normal unemployment rate in a free society? An economic textbook would say something about 5 or 6% unemployment rate. Today, we are below that here in the US, and many other countries would be very envious that if they had that level of unemployment rate. I think in France, it is still struggling at 10% unemployment rate. In Italy or in Greece, some of the youth unemployment rate approaches like 40% unemployment rate among the youth, people in their early 20s who are looking for a job. But in America, very, very low unemployment rate. Stock market, this was sent over here last week, so I put high stock market, and of course, it's a little wobbly going forward. But if you compare it to 1 year ago, it's about the same compared to 1 year ago. If you compare it to 2 years ago, it is up. 3 years ago, it is up substantially. And if you compare it to 4 or 5 years ago, you say, oh, I'm rich, for people who have invested in the stock market. So even though the stock market is a little wobbly at the moment, there is tremendous growth. And also high net worth. Net worth generally comprised of people's wealth from the stock market, as well as their housing wealth. As home prices rise, that is the main source of many middle-class wealth. And we are seeing both the consistent rise in home prices, while the stock market, after the huge gain, now showing a little wobble condition. Some people don't have exposure to stock market. They don't have exposure to housing equity. They're just starting out. For people who are just starting out, the first step towards life economic improvement is higher wages. And everyone should take their job with dignity. You see, we are hiring as you walk the downtown areas. Inquire within, we are hiring. Some of the jobs can be cashier jobs. Other job could be in the computer coding or construction. But people should always think that the first initial step to economic progress is to get a job and get that wages. And fortunately, with tight labor market, wages are beginning to pick up. One interesting anecdote is the wealthiest person in America, I think that's still the case today, Jeff Bezos of Amazon.com. He, during his teenage years, flipped burgers at McDonald's. I mean, this is how people get their work habits, by working at some level initially. So some millennials today, some people say they are spoiled a bit. They don't want to take any low qualified job. But I think, people need to recognize that many people started out earning wages, and then later they start building wealth over time. So let me illustrate all those points in a graphical form. First this is the chart of the gross domestic product, GDP, the total production in America, or total income generation. So this is the total production. And one thing to note is, overall, year in, year out, generally there's more production progress in America. But every once in a while, there's an economic recession. And that is the gray shaded area, or that shaded area. That's economic recession when we have stock market crash, job losses, high unemployment rate. We have not had economic recession for 10 years. That's a long time not to have economic recession. So some people are asking the question, are we due for one? Since we have not had a recession, surely recession must be just around the corner. If you just look at the timeline, you may say, yeah, maybe that's right. You know, maybe every 10 years there should be an economic recession, or history say there should be an economic recession. For me, I need to know the reasons why there would be economic recession. And right now, the reasons for potential economic recession is not there. Just for example, in the 1970s, there was several recessions in America, but that was triggered by oil prices running up very high from the OPEC oil embargo. That is highly unlikely in today's world because America is the largest producer of oil in the world, passing Saudi Arabia, passing Russia. So America is the largest oil producer, so we should not have an oil price shock. Maybe the prices will rise a bit, oil prices, but not a dramatic increases that we saw in the 1970s. Another reason why there could be an economic recession is people borrow too much money. So they spend a lot of money, so for temporarily, economy is going well because people are spending, but they're spending on borrowed money. But when the borrowed money is due, now they don't have the money to pay back, and it goes into economic recession. So too much borrowing can also lead to potential economic recession. One example is recent history of the subprime lending 10 years ago. Housing market boom from excessive borrowing or easy borrowing, and then collapse. Today, do we have excessive borrowing among consumers? And overall data points towards very manageable level of borrowing, no excess. So we don't see economic recession being triggered from over-borrowing conditions. Another possibility is Federal Reserve raised interest rates too fast, too quickly. And Federal Reserve remembers what happened when they raise interest rates too fast. It can trigger recession. With that in mind, Federal Reserve is trying to raise interest rate, but do it in a slow fashion, so it doesn't cause economic recession. And I think the Federal Reserve will make the right decisions, and they're clearly aware they have the instrument and power to possibly cause an economic recession, and certainly they do not want to do that. I really don't see the reasons why there would be economic recession over the horizon, even though it's been a long economic expansion. Australia is a very interesting case. They have not had economic recession for over 25 years. So it's indication that there's no reason why a country cannot continue to expand. And I think even in Canada, they have not had economic recession for almost like 15 years or a very long time. So there's no reason why, just because we have had long expansion, that America should experience recession just around the corner. This is the same data, but now in a percentage growth terms. So the second quarter showed a very solid 4% growth. The third quarter data is also showing close to 4% growth. So economy so far is running very, very nicely. And with the good economy, high stock market, and the rising home values, this is the total wealth in the country. Maybe today with a stock market correction, maybe it's about here. But even at my finger point, you can see it is clearly much, much higher than what it used to be. So at least among people with the exposure to the stock market or housing wealth, they're feeling comfortable. Now, only criticism of this chart is maybe some people are saying it is a concentrated wealth and it's not being widespread with more people in America. but there is a sizable wealth to be spent into the country at the moment. Unemployment rate going down. Miami, which is the red line, tends to be more volatile compared to the rest of the country. So it tends to be lower and then sometimes higher, but overall following the national trend. And right now, the Miami region, covering several counties in the local areas, at historically low unemployment rate. And job creation, very solid. This is the US national job creation. So the red line shows the job losses during the subprime housing market bubble and crash. And then since the crash, you can see consistent job creation. Job situation in Miami is doing twice as better than the rest of the country, in essence. So you can see little fluctuation. There was a housing market bubble and crash here in Miami as well, but look how fast it has recovered. So Miami area job growth twice as fast compared to the rest of the country, which means that housing demand in Miami also will be proportionally higher compared to the rest of the country. So someone who is buying property in Miami would be in a good shape because there is a steady flow of housing demand. Not only that, during the downturn, when things were very scary moment, prices were collapsing, somebody who were contrary to that view, to say, I'm going to invest during the downturn, they did very well. In fact, famous saying from Warren Buffett, so, it's either Jeff Bezos is the wealthiest man or Warren Buffett as the wealthiest man, they go back and forth. Warren Buffett always said one of his investment philosophy is buy whatever asset it is when everyone is scared. So during the housing market crash, when things were very scary times, anyone who purchased during that time would have done very, very well during that time. Job openings are very, very high. So these are not actual people with jobs, but companies are saying, we have a job opening, so please come and inquire within. So job opening remained very high, and it was like this in Brazil. Brazil will be very, very content. Right now, I think they want to change president just because they went through that economic recession. I know that there's some question mark about the new president's, some of his personal comments, but I think the Brazilian voters were really asking the question, there's no jobs in Brazil, we want jobs, so they want to do some change. So if the job levels were this high, I think people in Brazil would have been very happy, but it's not the case, and that's why they saw the change in presidency. But in America, the job opening situation remained very, very high. Companies are not firing workers, so the number of the people filing for unemployment checks, unemployment insurance, at historically low levels. Again, very good economic data. Economy is doing well, and you may say economy is doing great, so moving in a very nice direction. So if the economy is doing well, what about the housing market? Well, home prices are rising. So regarding home prices, it is doing fine. But what is not doing fine is for people who are involved in home sales transactions. Realtors are involved in transactions. They need people to buy and sell. And buying and selling is not picking up even though the economy is good. So our pending contracts, which is the first steps towards home purchase, it's been fairly stable, neutral, and now it's declining somewhat, but definitely not rising, even though the economy is rising. We have very low inventory situation. Only in recent months, we have seen some turn up in the inventory, but generally speaking, low inventory condition. Affordability is terrible. Prices have risen too much, too quickly, and therefore people who want to buy, they just simply don't have the money to buy. Low home ownership rate, low first-time buyers, and in our latest survey from consumers are saying, I'm not sure if I should buy. So we are beginning to sense there is some turn in the housing market. So this is a little bizarre. Very, very good economy, great economy, yet housing market is not lifting, even though we have a great economy. Let me go over these points in detail. So this is the pending contracts. It's been fairly stable, and now it's trending down. Even though we have more jobs, net worth rising, it is trending down. And if you look at where it is trending down the most, it is out in the West region. California, state of Washington, that's where the pending contracts are coming down. In the southern region, it's actually a little higher in the south, but it's in the west. So you said, what's going on in the west? Is there an economic recession? People are losing jobs in the West Coast, that's why the sales are coming down? And the answer is no. There is even stronger job creation in the west region. The reason why pending contract is coming down in the west region is it is simply unaffordable. In San Jose, the Silicon Valley area, typical home is about $1.4 million. So by normal calculations, one has to earn about $300,000 a year to qualify for a mortgage. And even people with very high salaries simply cannot buy a home in San Jose. So the consequence as to why the West region is falling is not because of terrible economy. Economy is good, it's just that prices have become unaffordable. So it is critical that we have maintenance of moderately priced home in the market. Otherwise, there will be fewer transactions, bad for your business outlook. Why are the prices running high? Well, inventories have been falling and falling. Now, in recent months, this has been rising, and I do anticipate to rise a little more, and that will be a good trend, because the reason why it's rising is there are fewer buyers. If there are fewer buyers, homes are sitting on the market longer, and furthermore, builders are adding more buildings, so we are getting additional new supply from the home builders. So we have seen falling inventory, but I think this situation is coming to an end. So there will be some lifting in the inventory, and I would say that will be a good trend going forward. And home prices, as you can see, just skyrocketing. In Miami, subprime boom, subprime crash. Now this recovery is very healthy recovery. We don't have subprime lending. So recovery is happening without the subprime situation and essentially back to the prior peak. But people who purchased when everyone was scared, at this point, they would have seen a tremendous gain in values. What about any potential for shadow inventory? Some homes under distress, it will show up on the market as distressed property. So should we anticipate that? And at least in Florida, the number of foreclosure starts, so foreclosure starts are the red line, is at historically low. After foreclosure starts, then it sits in the courthouse for a while before it being released, and you can see during the housing market bust, there was a huge backlog of distressed properties. But all that is eaten up. So there's very little distressed property coming onto the market in Florida. So one should not anticipate there will be some sudden inventory showing up from distressed property sector because there's nothing in the data to indicate there's anything in the pipeline. So the housing market condition, again, for people who are owners, it is a healthy situation where prices are rising, but this price increase may be a little too strong and hence is making it difficult for the buyers to purchase. So any adjustment in terms of prices not rising fast, maybe it just rise more slowly, I would say that would be a healthy adjustment for the market condition. At the same time, where home prices are much high, many consumers do not buy homes all cash. They need to take out a mortgage. And mortgage rates are also beginning to increase. This lower line is the 10-year Treasury. And the mortgage rate always moves in line with the 10-year Treasury, essentially, in a similar fashion. So if you want to know what's going to happen to the mortgage rate, tomorrow, just look at what the 10-year Treasury yield is. If it's rising, the mortgage rate will be rising. If it's declining, it will be declining. It moves in a very similar way. One thing to note about this mortgage chart, which is from year 2010 to today, is that every time there was a little spike, If one waited, it went down again. Spike, just wait a bit and it goes down, and spike, it goes down a bit. So now it's rising to a 10-year high. Mortgage rates are now at 10-year high. So either you, in your business planning, or your clients may be wondering, should I wait? And if I wait, mortgage rate will go down. Maybe that should be my strategy. And the answer to that is, don't wait. Because if you decide to wait and wait and wait, mortgage rate more likely than not will be even higher than what it is. So in other words, in my view, I think the period of exceptionally low interest rates are over. We are now in a permanently rising interest rate environment. Longer you wait, interest rates will more likely be higher rather than lower. In fact, currently mortgage rate is around 4.8%, 4.9%. This time next year, probably 5.5%. So longer you wait, interest rate will be rising. And here's the reason. First, the Federal Reserve is tightening their monetary policy. So they're raising something called Fed funds rate. Again, Federal Reserve is mindful if they do too aggressively, it can cause economic recession. So they don't want to do it too quickly, but they're doing a moderately pace. But they're starting from 0 point, which is very unusual. So they're moving from 0, trying to normalize back up. So that's one reason why mortgage rate will be increasing. Second reason why the mortgage rate will be increasing is this. Balance sheet. So what is this balance sheet? Several years ago, Federal Reserve printed a lot of money. Just printed money, printed money, printed money. And for American consumers, they say, what happened to that money? Because it did not reach my pocket, right? But Federal Reserve printed that money in order to buy government bond, so this is the government bond, and mortgage-backed securities. Why did they buy it? To keep the long-term interest rates artificially low. So when you had your clients who purchased home at 3.5% mortgage rates a few years back, those were bonus, exceptionally low mortgage rate caused by the Federal Reserve. So the consumers did not get the printed money directly into their pocket, but they got it indirectly in terms of lower interest rates for people who purchase. But those days are over. They're not printing money anymore. In fact, the Federal Reserve is indicating that they want to sell some of these and go back down to what it should be. So all the stuff that Federal Reserve had purchased with printed money, now they want to sell it into the market slowly. What does that mean? Someone has to buy all this. In order to attract buyers, Federal Reserve has to offer higher interest rates. Who wants to buy this? I will offer you, say, 3% rather than 2.5%. So they're going to offer a little higher interest rate. And this higher interest rate will be passed on over to the mortgage rates. And who will be the buyers? The buyers could be the Wall Street companies like Goldman Sachs, Morgan Stanley. It could be German mutual fund, or it could be Chinese government. When there's all this discussion about Washington, discussion about China, tariffs, Chinese government is doing bad things, well, China also has some weapons to play with. They can say, well, maybe we don't want to buy what the Federal Reserve is trying to sell, which means the interest rate will rise even faster. There has to be some buyers of this, because if they're not a buyer, interest rate will go up even faster than what it could be. So interest rates will be rising first because of this, but second, also because they need to sell what they had purchased. The period of artificially low interest rates are over. Now we are going back to normalization. Normalization means higher interest rates. Inflation is also beginning to pick up. For people in America, Social Security check, that's the pension for American retirees, part of their supplemental income. They may have their private savings. For people receiving Social Security checks, they received zero cost of living adjustment the past few years to say there was no inflation in America, so there's no need to give you higher Social Security check. Last year, they gave about additional 1% higher because they said there was small inflation. In 2019, January, they will get a new check, and the new check will have almost additional 2.5% more because government is saying inflation rate is picking up. So with higher inflation, higher cost of living adjustment. But higher inflation also means this. From a lender's point of view, when a lender is lending money, the money they get back would have lost purchasing power. So the money they get back would have been worthless. Just imagine extreme case, Venezuela. You lend the money, and the money that you get back, whatever it is, has become worthless over the time period because of the hyperinflation. So when the inflation rate picks up, the lenders have to charge higher interest rate because they know that the money they get back would have lost purchasing power. So with inflation rate picking up, the banks, mortgage brokers, independently of the Federal Reserve, will have to charge higher interest rate because they know the money they get back would have lost in purchasing power. So another reason why interest rate will be rising. And finally, one not bright spot in the US economy, I mentioned about the great economy, good economy, but one depressing part is the national debt level that's rising, rising, and rising. And at some point, you think that this will be bad news. Just common sense would say this is, parents' mistake passing on to their kids. In Greece could blow up because they have much higher debt than the U.S., percentage-wise. Greece would blow up, but Greece is not blowing up because they're getting help from Germany as being part of the European Union. I mean, Germany does not like the fact they have to help out Greece, but as part of the European Union, they're helping out. Italy is also somewhat benefiting, but it's Germany who is, again, subsidizing Italy. But in America, it's large debt, and it's not yet causing any problem in the bond market, but it could. But then you look at Japan. Japan has even higher debt than the US, and Japan is very stable and no problem. So maybe it is possible to have even higher debt and not run into a problem. Or you look at Greece, or you look at Italy, and then you look at countries that is outside of the European Union, like Venezuela, which just completely blows up, or in Brazil, where interest rates are very high because of high deficit. This is not a good news. But so far in America, it's not causing any damage in terms of the higher interest rates. So just the trend is, you have Federal Reserve, balance sheet, higher inflation, national debt means we are going to face higher interest rates. This is in billion dollars. So the way to read it, this is $18 trillion. 18 trillion, and the US economy is around 18 trillion, so this is about 100% of GDP at that level. So interest rate will be rising, without a doubt. So you wait and wait, hope for lower interest rate, it's not gonna happen. Interest rate will be rising, in my opinion. I mean, I could be wrong, but I think there's too many reasons why interest rate will be rising. But the interest rate increase, in my view, would be very moderate and manageable. So again, mortgage rate going from 4.8% to maybe 5.5%. So nothing alarming part. So since interest rates are rising, I decided to do, well, let's look at what happened to the housing market when interest rate increased in the past. So I look at 1984, interest rate increased from 12% to 15%. Interest rate increase here, interest rate increase. So all this time, interest rates were rising, and also it was a time period when the job market was creating jobs, so it was a good economy. So what happened to home sales? Well, sometimes it increased. It actually increased even with higher interest rate. Sometimes it did not really change. Month to month, it may decline, but if you look at over 12 months, in a whole year, it did not really change all that much. It did not change. Only time what it impacted was when the interest rate was increased when people had subprime lending, adjustable rate mortgages. So when that increased, it just led to the crash. But you exclude that time period, and we want to exclude it because we never want to have a repeat of that situation. This is indicating even if the interest rate rises, home sales can remain fairly stable if there is a job creation. So your mindset should be interest rate would be higher, and home sales, even though it's coming down a little bit right now, should remain stable as people digest they are in permanently higher interest rates. Home ownership rate, in the meantime, is slowly coming around. And in a few minutes, at 10 o'clock, there will be new data on home ownership rate. I'm eager to see what the trend is, whether it's picking up again. But it is rising, but note that it is still well below what it used to be. So we are not back. So good economy, but housing is not yet fully back along with the economy. And it has a consequence because home ownership brings tremendous wealth for homeowners. Rising prices, those are equity for homeowners, but the renters, there's virtually nothing for renters when home prices rise. And in fact, I chose two periods, year 2000 and year 2016, the latest data from the Federal Reserve. If we had year 2018, it would be even higher because home prices have risen over that period. So homeowners have substantially more wealth compared to renters, and that's why this chart, we need to have a more consistent improvement in home ownership. Otherwise, American wealth distribution will become more unequal with homeowners benefiting, but if there's large rental population, they are not benefiting, and they may want to do something drastic. And one of the drastic thing is, in a few days, there will be US election. In California, there's a ballot measure in California where they want to impose rent control. Because people are saying home prices are high and rents are high, and renters are tired of this. They are saying everything is very pricey. So they want to impose rent control. And rent control would be the worst possible policy to be imposed because there's no incentive for the builders to build. So you want to, in order to moderate home prices, make the homes more affordable in California, they just need to build more homes, or maybe even give tax credit to build affordable apartments. So that's how you get more affordability rather than imposing rent control, because rent control means the builders will not build, housing will deteriorate because there's no incentive to maintain. But if you have many renters, the situation could turn to that way. We take survey of consumers randomly selected across the country and ask some simple questions. Here's the question we ask. Is it a good time to buy? And here's what people are indicating. About 45% of the people say, yes, it's a good time to buy. But look what has happened in 2018. Much lower number has indicated that it is a good time to buy. When we look into the data a little deeply, we wanted to find out why that is the case. Is it the case that you think the prices will collapse and you don't want to buy at the peak and because you don't want to see a depreciating asset? And what we find is people believe prices will be higher next year or in 2 years. So blue is, do you think prices will rise? Gallup poll, most people are saying yes. Very few people are saying no. Other survey, Fannie Mae survey, NAR consumer survey. We also ask realtors, you work in the neighborhood, in your neighborhood, do you think prices will be higher or lower? Realtors are indicating prices will be higher. So across many surveys, people believe home prices will be higher. Then why do you have this diminished optimism about home buying? So it cannot be that people think they don't want to buy or less enthusiasm because prices will collapse. People are saying, no, prices will not collapse. The reason why people are expressing disappointment is lack of inventory, especially for starter home, moderately priced homes. When those homes comes onto the market, lower priced homes, there's often multiple bid process. And when there's a multiple bidding, only one person wins and other people lose out. And they are tired of this process. They are saying, I want to see more inventory. And also, I do not want to make hurried decision. I want to take time to make that decision for home purchase. It's a major expenditure. But the low inventory has led to the situation where realtors are telling their client, here's a home that came in, make a bid. If you don't make a bid, it will be gone. And consumers are tired of this process. So what we need to bring this back up, raise the confidence, is we need to have more inventory showing up in the market. Right now, we are sensing some inventory showing up. I think it will take a little time, then slowly this will come back up in my view. But at the moment, they are expressing less optimism, not because they think prices will collapse, but because of lack of inventory. And here's the reason why we have housing shortage, lack of inventory. This is a single-family housing starts, and you can see for multiple years, it's been well under what it used to be. Maybe we don't want to produce at the bubble level, so this is a overproduction during the bubble. We don't want that, but you can see for many, many years we've been underproducing, even though it's slowly rising and rising. 2018 will probably be a little higher, about 5 or 8% higher. And this is the Miami metro area. So again, very similar to the national trend regarding single family. But of course, Miami is a very unique market in terms of there's many condominiums. So if you look at the apartment and condominiums, it looks like this. But I understand the current composition is more apartment than condominium, while in the past it's been more condominium than apartments. So it's been shifted more towards rental units and less towards ownership units. But we need to ensure that we have more housing supply. Even in California, they need more housing supply. So how do they get more housing supply? Make it easier for community banks to provide loans, construction loans for the builders. Also, this is not NAR policy, just my personal opinion based on with an economist training, is that tariff and lumbers or raising aluminum or steel prices just make it more costly. So you cannot build affordable homes. Some builders are saying, I want to build moderately priced home, and then you put this, and they say, there's no way. There's no way to turn profit at that level. So removing some of the additional costs. And also, don't be too stringent on the zoning rules. And maybe some of the empty malls, as people are shopping in Amazon.com, less people are shopping on actual streets. So some of those empty malls can maybe be converted into condominiums. And also, let's bring more construction workers. And I think many high school students, they are saying, I need to go to college. I need to go to college. And maybe we don't have to send everyone to college. Again, just sort of dignify work. Jeff Bezos started from McDonald's. Maybe some people can work in their early 20s in construction, make some money, good money, it pays good middle class income, and then maybe they try out college. I'm not sure what the right formula is, but currently there is a massive shortage of construction workers, which makes the builders who are able to get the loan, but they cannot find the workers to build a home. Now let me turn quickly to commercial real estate briefly and then go into the global market. Commercial real estate. If there is a bubble, and definitely there is not in the residential market, home prices are rising and rising. I hope in the future it rises more slowly, but there's a housing shortage, so prices will rise. But if you are buying office building or you are representing to buy a shopping mall or apartment buildings, this is where I think there could be some price correction, small decline in prices. Because first, commercial prices have risen even faster than residential, much, much faster. And because the commercial prices have risen so fast, the rate of return is very small. So this is something called cap rates. If you purchase the property, you are getting the rental income, but how much of the rental income is in relation to the price you pay for the building? And you are finding that right now it's only 5.1% rate of return, which is very low by historical standards. Now the Federal Reserve is raising interest rates. So if the interest rates are rising, that means that some people may say, I want to invest in US Treasuries, take the money out of the commercial real estate and go into the US Treasuries. So this will rise. Cap rates will rise. So if the cap rates have to rise, what does that mean for the building? For the building, they either have to charge higher rents on their tenants, whether the renters, the office tenants, they have to charge much higher rent, or if they cannot charge higher rent because of the market condition, they have to reduce the price if they want to sell it. So right now, what we are seeing is fewer transactions in commercial real estate sector is coming down. And again, good economy, but fewer transactions. And so something is not right. But this fewer transaction is due to the conflict between buyers and sellers. Just think about it. Apartment building, the owner of the apartment building wants to sell that property and saying, look, it's a good economy, high occupancy, the rents are coming in, I don't want to reduce price. While the buyers of the apartment is saying, rising interest rate, I cannot pay that price. So they cannot agree on the price, so therefore there is a fewer transactions. So only way to get the transaction done in the commercial real estate is for the owners to think about reducing prices, otherwise there will be no transactions. Global real estate. Briefly, the trend has been exceptionally strong. So this is the first year we began tracking about global purchases in the US real estate. Just a little side note, NAR has been doing this study since 2011, or maybe a few years before. And the reason why NAR has been studying is this. I was an economist at that time, and I was just curious, how many Canadian buyers are there in America? So I naturally went to the Department of Commerce in Washington to ask them the question. Then I went to another department in Washington. And every place I visited, they said, we have no idea. So I said, well, why don't we just ask realtors about their clients? So as you sold that property, did you have some Canadian buyers? Or did you have some British buyers who purchased the property? And through that surveying of the realtors, we are able to gather this information. So it's not a perfect measure, it's a sample, and therefore it's an estimate. But the overall trend has been rising, except for just few down years. But look, it's going from 66 to today, 121, essentially doubling over this time period, which shows the importance of the international real estate, the global market. And again, I'm glad that Miami is holding this real estate international congress just to again emphasize the importance of international connection. So it's been rising. Of course, it's coming down from 2017, and maybe some of that decline is due to the fact that during the presidential campaign, at least President Donald Trump, for all his good quality as well as all his good bad qualities, he's a very unique personality. I mean, he called North Korean leader, I'm from South Korea, but he called North Korean leader one of the worst possible names. And then there was a reversal of calling each other names. And before you know it, they're hugging and say, we love each other. So I don't know. But during the campaign, President Trump was clearly making the case that all this international global stuff is not good for America. So he wanted to focus, and whether that scared off some of the international buying, I don't know. Or it could be just this increased so much that it was just inevitable that it was going to decline somewhat. But this is still the second highest in the figure. Or it could be the economic circumstances. The US dollar strengthened. If the US dollar strengthened, it just makes it more difficult for the foreigners to buy here in America. So I would say that this decline is nothing to panic about. This still shows the overall long-term trend of the growth that is occurring. And this is the dollar. So again, makes the dollar strengthen. It clearly makes foreigners more difficult to buy here in the US. And the market share of the total international transactions, in terms of the total unit sales, about 5% of the transactions are by foreign buyers. But in terms of the dollar volume, it's 8%. And why is that? Because the foreigners buy more expensive properties compared to the US residents, generally speaking. And how many of the realtors have international clients? It's 23%. It's falling, and you say, why is the number falling? Well, the number is falling because we have so many new realtors coming into the industry over the past 5 years. New realtors are not focused on international buyers. They're just focused on domestic buyers. So that's one of the reasons that we have so many new realtors coming in, and they're not focused on international buyers, and therefore the percentage of the realtors who are engaged with international buyers is a little lower. Where are they coming from? Principally, it used to be Canada and Britain used to be the dominant players. The English speakers used to be the dominant players. But now China has become essentially number one in recent years. Canada slipped into number 2nd spot. Mexico is still showing good influence, especially in Texas, Arizona, the California markets. India, because of the technology growth and many of the Silicon Valley hiring people from India, and in all sectors, New Jersey, heavy concentration of people from India. So India is becoming important. Britain, which used to be about 12%, they have fallen to 3%. Relatively speaking, the U.S. home prices and the dollar appreciating, has maybe possibly held back British. Brazil has always consistently maintained at this level. Sometimes we see Venezuela in the picture, and sometimes not. Colombia is also very important. So there is this huge international flow of purchases in America. Again, the most recent year, it was the 2nd best year in terms of the international transactions. And international buyers generally buy more expensive homes. So as you can see, the international buyers are blue. They purchase more expensive home compared to the domestic buyers. And how do realtors get those international buyers? Is it you have a website and you put some Russian language or French language, Italian, and say, come and buy home, I'm your realtor? And what we are finding is, no, the website really does not help tremendously. Maybe they want to look at the website to validate or cross-reference, but how you get your client is really through personal contact, or through what a former client recommended. Sometimes you have a walk-in open houses, business contact in the U.S., so you can see a lot of networking that is being done, and not just random viewing of the website and somehow through the website that people are initiating. So I always say, if you're a realtor, have a very good website, because they will check your website for validation. But the website is not how they contact you. How they first get your contact is through relationship and networking. And once you have it, then the client wants to naturally see who you are to validate and go to the website. So again, this is very important, and why networking is critical for your business. And international trade right now is growing faster than GDP. Again, GDP is growing at about 3 or 4%. But import and export is rising at 5%. Again, greater importance of overall international dimension to the U.S. economy. Only thing is, you have a gap between import and export, which drives President Trump crazy. He is saying, why is import higher than export? But this has always been the case. Anytime import and export both decline, there was an economic recession. So if there is a trade war with, say, China will be devastated, but it will boomerang back into the U.S., and U.S. will lose jobs, and there will be an economic recession here in the U.S. So if there is a trade war, but why is always this gap? And the reason why there's this gap is America is in a very special privileged position. And the privileged position is people trust the U.S. dollar. Venezuela, they know that, what is it, the currency, peso they use. So peso, no one trusts the peso. Bolivar, and in Venezuela, they don't trust the Bolivar. In other countries, anytime there's a little crisis, they don't trust the currency. But one currency they trust, I should say, a couple of assets. One is gold. If they have gold, yes, they want to keep the gold. Another one is cash in U.S. denomination. So because of this unique privilege that American dollar provides, it makes dollar a little stronger because so many people trust America. And if the dollar is stronger, that means Americans can import more because foreign stuffs are cheaper, relatively speaking, and that's why we always have this. So as long as this grows, U.S. is creating jobs, things are good. My personal opinion is tariffs and this aluminum steel tariffs, these are unforced error. President does not need to do because it will not improve the trade situation. He may think it will improve, but it's just causing some companies to face higher costs of doing business. Invest in the US, well, this is the price to rent ratio that was created by IMF economists. International Monetary Fund, across various countries. And here is 100, they say it should be about the normal. Whereas there is a concern about housing market bubble. Canada, they are saying be worried because home prices appear to be much, much high compared to rent. Say Vancouver, Toronto. Maybe New Zealand. Interestingly, Colombia is here. I'm not sure what's happening in Bogota. I know in Colombia, they went through that terrible war, but things have stabilized. The economy is growing very, very fast, and maybe that is providing the foundation for strong uplift in prices. But America is here right in the middle. So if there is potential real estate price decline, again, our survey shows people do not think prices will fall, and overall they're correct. But if there is a price decline, it will most likely start in Canada. And even in Canada right now, they're not seeing price decline. So America is in very good shape. So people are investing. If you want to invest in Canada, well, be very cautious. But if you are investing in America, I think you can have the confidence that it will not be a depreciating asset. So the forecast is home sales, I think, will be very boring. Boring means no increase or no decrease. It's going to be about the same. So recent pending contract has been falling, but I think after people digest higher interest rate, that we're in a much higher interest rate condition, and also the fact that inventory will begin to show up, builders are building more, I think the sales activity will be fairly neutral. And also past history shows rising interest rate, job creation, home sales really do not change that much. So that's my forecast on home sales, kind of boring. But the prices will continue to increase. But I hope prices increase at slower pace. So rather than 8% price gain in 1 year, it will be 8% price gain over 2 years. So it could be 5 and 3 or 4 and 4, much slower price appreciation. So you invest in America, it's an appreciating asset. And commercial real estate is one area of real estate where I do have slight concern, not a major concern. Fewer transaction, maybe 5 to 10% decline in the overall sales activity. I think in the sort of the Class B, Class C building, it will be fine, but it's the Class A building where they may see some price adjustment of 3 to 7%. And the reasoning for that is cap rates are so low. People are overpaid. People overpay those properties. Now with the rising interest rate, people simply cannot pay at that price. Markets to target in terms of trying to get a client base. China, I think, will become stronger and stronger. Their economy is growing faster than the US. That means millionaires right and left, they want to buy in the US. Canada always has been a steady source. I think that Brazil will be a very interesting case to target because I know they went through a recession. And maybe they can turn around the new president, again, just somewhat controversial, but if you can get the economy corrected, I think that could lead to, there's a huge potential in terms of Brazil. Britain, Colombia and Chile, they are doing very well economically, and anytime they do economically, I think there will be some people who are interested in buying a property here in the US, just as a vacation home, but also as a status symbol. They can say, I have a home in America. In terms of the target outbound, Costa Rica always has shown stability. I know sometimes people hear the news of Mexico in terms of some kind of drug war or danger zone, but there is a sizable number of American expats living in a very safe neighborhood in Mexico. The spreading of the words will pass. Much lower cost of living. So I think there will be a steady flow of Americans going into Mexico just because baby boomers are retiring. Panama's steady, and Colombia, again, after that terrible civil war, they are showing stability, solid economic growth, and Cuba is always a wild card. And it could be like a Hawaii paradise immediately without the Castro brothers. But as long as the Castro brothers there's always a little shakiness. Sometimes they try to open up, but Cuba is a huge wild card where you could transform very quickly, very quick, just because of the proximity to the U.S. So with that, thank you for listening, and best to you. Thank you.
How do you forecast the gap between short-term interest rate, long-term interest rate, and how will that affect the economy?
Very good question. Short-term interest rate, long-term interest rate. Regarding the forecast of short-term interest rate, Federal Reserve directly controls short-term interest rate, that Fed funds rate, and they give good guidance. They said, we will raise interest rate if the inflation occurs here or how the economy moves. And based on all that assumption, it looks like short-term interest rate, they will do one more time in December, and then 3 more times next year. So we pretty much know the short-term interest rate forecast. Now, the long-term interest rate do not have to follow short-term interest rate, but at least directionally, if the short-term rates are rising, long-term rates are probably going to be nudged a little higher. But the long-term rates, one has to look at inflation, and inflation rate is picking up. So based on those criteria, I have the forecast where mortgage rate rising to about 5.5% next year. Again, nothing alarming. Those are very historically low interest rates.
I love your presentation always. Case-Shiller tends to think that we're in housing bubble number 2 as we're 6% above the last. What do you think about that? Are we just going to go into a long kind of a curve? Or?
Thank you for that question, because the prices in Case-Shiller data had been rising close to 10% last year or 2 years ago. Then it was about 8%, but consistently in the high single digits. Today's report show is going in the mid-single digit level. So prices are rising, but at a slower pace. That's not surprising because we have already seen that in our median prices, which is growing at 4%. So that's not surprising condition, but that's a welcoming trend because prices rising faster than people's income for a long period is not desirable. Also, since you mentioned Case-Shiller, Dr. Robert Shiller of Case-Shiller Index, Dr. Robert Shiller, Professor Case passed away, but Robert Shiller is at the Yale University, Nobel Prize winning economist. Back in the year 2000, he said, watch out for the NASDAQ stock, it's a bubble, it's gonna collapse. He proved to be right. During the housing market bubble, Dr. Shiller said, watch out, nothing makes sense. There will be a terrible consequence in the housing market because of the subprime lending. He proved to be right. Dr. Shiller, it will be at NAR DC building in December to talk about his latest outlook. But it looks like, based on his recent comment, this weekend he commented, he said, housing market looks to be fine. So that was, in essence, his comment. So that's his assessment of the overall market. And we have to listen to him first because, he was his specialty area is in the bubble crash area, psychology-driven part. And he proved to be right. And third, he's a Nobel Prize winner. We should always listen to Nobel Prize winners. One final question, yes.
Yes, good morning. Great presentation. I'm coming from Costa Rica, and our reality is different from yours. And my question is, I don't understand how short inventory affects the market because, as I said, our reality is different. We have a large inventory available for everybody here and your clients. And for that, I want to know how short inventory affects the market that you already told.
In the U.S., I mean, most markets have experienced a tight inventory, and therefore people who want to buy especially mid-priced home or below average priced home, very difficult to get multiple bidding. If there is a sufficient inventory in Costa Rica, I think you should use that as a positive point to say plenty of selection, calm decision process. And of course, from the market perspective, maybe builders overbuilt in Costa Rica, so they have to reduce the prices and they're not getting so much profit, or maybe they're even, so there will be but in terms of the consumers wanting to buy, as you are attracting buyers to Costa Rica, you should say a plentiful inventory. And one can buy a good priced home in Costa Rica, and best thing about Costa Rica is stability. So, some Americans who are not aware of all the nuances, differences in Latin America, people think, well, I would never consider Latin America to buy a home. But anyone who has visited Costa Rica would know what an attractive country it is. Okay. Thank you very much.